Hello. Hi. Hi, Bankman. This is Vasant Ponkshe, a retired bank officer from Bank of Maharashtra. We all are aware that the news items about the government's intention to privatize the public sector banks is roaming around in all types of media. As per the media reports, they say that Niti Aayog has moved the proposal for the consideration of Government of India to either reduce the stake of Government of India in the public sector banks or privatize them or straight away sell some public sector banks. Many of my friends, they suggested me that I should place my views in this regard for their consideration. We all know that in the industry, many deliberations are going on. Some young generation officers are very frightened with the news, and some old generation officers, they are feeling embarrassed as to the bank in which they have grown, they have come up in their careers, the banks will lose their entity. So everywhere the atmosphere is very gloomy and the interactions are taking place and deliberations are also taking place as to public sector banks versus private sector bank. The another deliberations which are going on are, they are saying as to whether merger of the banks would be alright or whether the privatization of the bank can be stopped or whether government should change its mind and all these things. So as per the suggestion of my colleagues, I decided to come out with this video for internal circulation of my own colleagues, in which I have tried to jot down the points and I will be deliberating on those points one by one. And I would like to have my own assessment as regards my perception of the issue of the attempts of Government of India for privatization of public sector bank. So let us go step by step. The Government of India is to announce the different sectors as categorization of those sectors as strategic sector or a non-strategic sector. In any strategic sector, according to Government of India, they want to keep only 4 public sector entities, and all the remaining entities which are in public sector in that particular sector or particular section, they will be either merged with each other or they will be privatized or they will be sold out. But in any case, the government is of the opinion that in any strategic public sector, only 4 entities in the ownership of Government of India should be there. Now, there are many debates and interactions going on, as I told you, and SWOT analysis is also being done as regards the performance of private banks and also the performance of public sector banks. Now, many have raised the concern, as I told you, I suggested to place my views. I would like to state here that being a person who reads minimum 60 to 80 pages per week and try to search the latest financial news items through blogs, through articles at local level, national level, international level, including RBI, Finance Ministry, ADB, World Bank, IMF, Basel, so on and so forth. I am trying to reach out to the banking staff through my video for private circulation. At the same time, I would like to clarify that I do not claim that I am an expert on the topic and I am open for corrections and suggestions. My placement is bound to have reflection of my reading of 15 years, my experience as banker for 40 years, my perceptions, and it may differ from person to person. While placing my views, I do not have any intention to criticize anybody, any authority, but I wish to read the things in my own assessment of the situation. Now, coming to the point, they say that it is estimated that around 90% entities in public sector, in different sections, in different patterns of public sector, or say from different sectors, will be either merged with other public sector entities from the same sector, or they will be sold or privatized or whatever it is. But finally, government wants that in any public sector, only 4 government entities will continue to function. As we all know, in my own assessment and as the popular assessment of all of us, mostly the banking will be identified in the strategic sector. So, as per the recent announcement of Finance Minister during the 20 lakh crores of packages, they say that only 4 public sector banks will remain in near future As per my assessment, maybe in next 2 or 3 years. Now let us analyze what is the present situation. At present, there are 6 banks, mega banks you can say, after the recent mergers. Who are those banks? First is State Bank of India with 2,57,000 employees, Punjab National Bank with more than 1 lakh employees, Bank of Baroda with more than 84,000 employees, Canara Bank with 89,000 employees, Union Bank with more than 76,000 employees, and the 6th one is Indian Bank with more than 42,000 employees. Now, there are 6 standalone banks, those who are kept away from the merger. Which are those banks? Bank of Maharashtra with more than 13,000 staff, Central Bank of India with 35 or 36,000 staff, Bank of India with around 49,000 staff, Indian Overseas Bank with around 26,000 employees, Punjab and Sindh Bank with around 9,000 employees, and UCO Bank with around 23,000 employees. The position is that of 2019, which I got. When only 4 entities are to be kept in public sector from each sector, then those 6 banks which have emerged as after the mega merger cannot be considered for privatization, obviously. So one more round of mega merger has to take place, means banks like Union Bank of India or Indian Bank of India or Indian Bank or maybe any of the 2 from 6 mega banks will have to undergo a second round of mergers, and these banks will have to get merged into either of these 4 big banks, that is State Bank of India, Punjab National Bank, Bank of Baroda or Canara Bank. Of course, this is my own assessment. So there may not be any question of any further merger of remaining 6 standalone banks according to my assessment. When only 4 entities are to be kept in a particular sector, means only 4 banks have to be kept in the banking and financial sector, then according to me, there is no possibility that any of the 6 standalone banks will be merged into each other to form one more mega entity over and above the 6 mega banks which are there in the banking system of India. So instead of privatization, if all these 6 standalone banks are to be merged, then they will have to get merged into either of these 4 above listed banks, that is State Bank, Punjab National Bank, Bank of Baroda or Canara Bank. In that case also, these all 6 standalone banks are likely, or for that matter, they will lose their own entity. If that happens, only 4 public sector banks remain in the banking industry ultimately after say 2-3 years, then it will lead to a very difficult situation as far as the staffing pattern is concerned. Let us see that. If we take on an average, we will find that in all the 4 banks, on an average basis, there will be more than 2 lakh employees. What could be the distribution amongst the different cadre that we'll see at a later stage. The position is that of 2019. We all know that there cannot be a separate treatment to be given by Government of India for separate sections. Means they say in banks we will keep 7-8 banks, in other sectors of the public sector they will keep only 4. So as per my assessment, government will have to keep the uniformity across the board. So remaining 6 banks will have to be either merged into 4 public sector big banks, or they will have to be privatized, or they will have to be sold or to be kept on the block. Government has conducted various exercises like Gyan Sangam 1 and 2 and many more brainstorming stations have taken place in last 4 and 5 years. So the general trend, as we know, at the apex level is that slowly government should come out of the public sector and let the things operate as per the market forces operating in that particular sector. Now coming to international position, as per the international compulsions, government has no option but to go by the Basel compulsions as far as capital adequacy is concerned. Now when Basel III is yet to settle in banks in India in totality, there is a beginning of working on Basel IV already, you imagine. Now few nations have already started opposing the concept of Basel IV. Simultaneously, an agreement has taken place long back in between Basel and IFRS, that is International Financial Reporting Standards. about bringing new norms for international financial reporting at all levels all over the world. Now, according to IFRS, that in international financial reporting standards, the norms for income recognition will undergo huge changes. Along with that, many strong restrictions will come. They will not allow income to be recognized unless it is actually received, in fact, factually received, actually received. As far as Indian companies are, Indian accountants and chartered accountants are concerned, they are aware of all these things. And as I understand, they are keeping their proposed or protective or you may say dummy or presumptive set of balance sheets, if at all these standards are to be implemented, and they want to know what would be the position of their own balance sheet post implementation of these IFRS standards. Now, Indian accounting standards are based on and substantially converge with the IFRS standards as issued by the board. India has not adopted yet IFRS standards for reporting by domestic company and has not yet finally committed anything about adopting it to IFRS. Now, if those standards are to be applied in banks, then many banks will have to provide extra amounts to the extent of thousands of crores of rupees in its balance sheets, which will be huge, and the balance sheets of the banks will badly affect. Now, it's good that till today the government of India has not allowed the implementation of those standards and it has been postponed, but sooner or the later they will have to implement this. Now, in such a situation, Basel III is a compulsion. Government may not have money to provide more and more capital to public sector banks as it was offering or it was providing either to. Now, we all are aware that due to Corona, the Indian economy is bleeding as well as all international economies are bleeding. And experts say that it was, as far as Indian economy is concerned, experts say that it was already in trouble even before Corona. Before Corona, we all know job loss in India was already highest and the jobless data was not released. We all know that the GDP calculation patterns have been changed meanwhile. We also know that the revenue of Government of India is reducing day by day. The pitfalls of 20 lakh crore package are slowly coming out day in and day out. Incidentally, the entire package has been pushed through public sector banks only, and lakhs of public sector bank employees are serving the nation to see that the package is through to the nook and corner of the country, risking their own life without any sufficient insurance cover. Naturally, I salute all those bank employees, frontline bank employees, those who are working around the clock, risking their life. Now, due to Corona outburst, moratorium of 6 months has been granted by Reserve Bank, so naturally the benefit has been passed on by the banks to their own borrowers in case of loans and advances. RBI has also pushed huge liquidity in the banking sector, but to my surprise, banks are not able to lend more and more, maybe because there are no takers also, and as a result of that, banks are parking huge funds with Reserve Bank of India to earn the interest out of reverse repo rate benefits, and the Reserve Bank had to pay lakhs of crores of rupees to the banks on account of reverse repo interest. That is why, as I perceive, the Reserve Bank of India has drastically reduced the reverse repo rate in last 4 to 5 months. Now, in banks, accounting issues are coming up, some legal issues are coming up, since some systemic issues are also coming up. A case is in queue in Supreme Court of India, as we all know, that the payment of interest on loans and advances taken by the borrowers during the moratorium period. The argument is that when the 6 months moratorium has been given, why banks should charge the interest on loans and advances for the moratorium period. Now the case is there in Supreme Court. Reserve Bank has said that if that is to be there, 2 lakh crores of interest income will be lost by banks. Now tomorrow, if Supreme Court decides that banks should not charge any interest from borrowers for the moratorium period, then again the balance sheets of the bank will further take a big hit, and banks will not be allowed to charge interest to the extent of 2 lakh crores, entire banking industry, 2 lakh crores on the moratorium period given to the borrower. Now, IBC is also being considered as one of the best options, but we all know, we all observe for last more than a couple of years that the actual recovery and the haircuts required to be taken by the banks are most disproportionate. In most of the banks we see the write-offs provisions are more than actual cash recovery. Is it not a bad situation? Now, once the moratorium period will be over, then the true picture will come up, and experts say that there may be another wave or another round of more and more NPAs, and banks will find it difficult to handle the situation. On the other hand, government is asking RBI constantly to consider one more restructuring options to be given to the banks, and restructuring of borrower accounts and advances accounts to be considered by the bank, taking into confidence the customers. According to me, if that takes place, it will amount to restructuring of those loans and advances, because twice restructuring has already taken place in the past. But in the latest meeting of the Board of Directors, as we understand, nothing was discussed on this issue, and now a decision has been taken as yet by Reserve Bank of India. Now, rating companies are also coming into picture. We all know that recently the rating company has downgraded the rating of Axis Bank, and there will be different problems also. On the other hand, rating companies are predicting that, as we know, many of the banks, many of the even nationalized banks, are likely to take a hit in their income to the extent of 40%, imagine, in the year 2021. Now, if that happens, then some banks, according to my assessment, may go even in operating loss. In that case, few banks may again draw prompt corrective action from Reserve Bank of India. Now, in such a situation, the need to provide more and more capital to banks will become inevitable on the part of the government, and at the same time, government may find it difficult to provide the capital to the bank as it was providing, as I already said. And if the capital could not be provided, then it will be a breach of Basel III norms. That would be, of course, a bad position. This will take a bad name at international level, because on one hand, government may not be in a position to provide sufficient capital to the banks, and on the other hand, banks may not be able to generate their own capital from their own profits. Now, as I said, the rating agencies will not naturally come into the picture. Now, looking to the international scene, as I understand, as I have read through different columns, the IMF and World Bank has been insisting for 3 stages formula for banking in India, and it's not new story. What are World Bank and IMF are saying, what they insist on the government of India, the strategy should be threefold. First, recapitalize the bank. Second, restructure the bank. And if that is not enough, if that doesn't help, then straight away they are saying rewind the bank. Now, as we know, in Indian banking system, recapitalization has taken place. It is going on. Restructuring of banks has also taken place. Now, the third option remaining is rewind, means nothing else but either privatize those banks or sell those banks to the private entities. I would like to draw your attention to old saying of one of the ex-RBI governor. Of course, in a different context, he said a couple of years back that according to him, let some banks be allowed to die. Is it not that serious? Is it not that very cruel to say like that? Now, in such a situation, government is thinking of stake sale, privatization of the public sector banks, or selling of the private sector banks. So we need to analyze and understand all this background which I tried to explain to you, on which grounds, in what situation government may be having compulsions to think on these lines. Now let us understand the position about IDBI, because Government of India, as we all know, has already completed this experiment in IDBI Bank. So let us understand in brief the history of IDBI Bank. We all know that initially IDBI Bank was a subsidiary of Reserve Bank of India. Subsequently, Reserve Bank of India transferred IDBI to the Government of India. On June 29, 2018, Government of India advised LIC, that is Life Insurance Corporation of India, to purchase a major stake in IDBI and gave a technical go-ahead, imagine technical go-ahead, from the Regulatory Insurance Authority, that is IRDAI, was also given to LIC, and LIC completed the formalities and increased its stake in IDBI beyond 51%. So it's all over. LIC completed acquisition of 55% controlling stake of IDBI on 21st January 2019, making LIC as a major stakeholder in IDBI Bank. In other way, it is privatized. It is sold out to LIC, as we can say. Naturally, Reserve Bank of India has clarified while its press release on 14th March 2019 that IDBI Bank, according to Reserve Bank of India, has been recategorized as private sector bank for regulatory purposes with effect from 21st January 2019. Now, RBI says that IDBI is a private bank, but interestingly enough, the Government of India treats IDBI Bank as a public sector bank for recruitments, for CVC references, for RTI, for employees related regulations, for government reforms and government actions. Government treats as if it's a public sector bank. So enough confusion is already there in IDBI about the classification of the same. As I understand, on small issues related to employees, related to the customers, related to regulations, related to classification, related to the calculation and tabulation of the information, matters are required to be referred by IDBI management to either RBI and Government of India. And mind well, the replies from both the authorities may not be uniform and in tandem with each other. So that is the situation in IDBI. As they say, there are two cadres. One is IDBI cadre and the other is the different cadre, non-IDBI cadre, you may say. And naturally, perks and perquisites and pay scales may not be that equal as we can easily understand and assess. Now, they say that government may try three types of ownership in different public sector banks or in banking sector. A, wholly government-owned bank. B, majority government-owned bank. And C, large majority stake held by the government in a bank. The concept of long-term private capital by the corporates is also being tossed on the other hand. It's a very dangerous concept according to me. If banks are to be privatized or to be sold, the options available are disinvestment, block deals, asking other public sector undertakings like LIC to purchase stake in banks, allowing FDI, so on and so forth. In short, government may plan to reduce its stake to 75%, then 52%, then 49%, then 30%, then even 26% as I envisage. The government is planning to allow, as we understand, FDI in banks also from present rate of 20% to 30%, then 40%, and who knows, may finally allow up to 75%. Now, the latest law amended in 2013 about the voting rights in banks is outdated according to the corporates and experts. Now, as per this latest amendment, an increase in voting rights of an entity in a private bank has been raised from 10% to 26%. Similarly, voting rights for any entity in public sector banks has been raised from 1% to 10%. Now, as a result of this amendment, the powers have been given RBI to supersede the board of any bank up to 1 year if Reserve Bank feels that the bank is not working properly in the interest of deposits. It also gives powers to Reserve Bank of India to ask for the information from banks' different associates. This amendment has taken bank mergers and acquisitions out of the ambit of CCI. Mind well. In short, any entity having large capital in its hand shall have only 26% rights maximum in any private sector bank, and to the extent of 10% only voting rights in any public sector bank. That is the catch. If the banks have to be privatized, then government may have to increase, according to my assessment, voting rights beyond 26% in private sector banks and beyond 10% in public sector banks. Otherwise, for any company or a stakeholder to have huge capital investment in private sector banks and public sector banks and have only 10% voting rights and 26% voting rights, then how that entity would like to invest to that extent in any private banks or public sector bank? In that case, who will purchase the stakes in public sector banks for only 10% voting rights? Now, there is a thinking that business houses will be given licenses to open private banks with the condition that they will not lend to their own subsidiaries and sister concerns. But surprisingly, they may lend to each other's subsidiaries and with a perfect understanding, and we all know no one can stop that. In short, for preparing for sale or privatization of public sector banks, the government will have to do lot of paperwork and groundwork, according to me. Now, as we all know, Bank Nationalization Act will have to be amended, and for that, Parliament will have to be moved, both houses, Lok Sabha and Rajya Sabha. Now, PSBs, we all know, are governed and regulated by RBI under the Banking Companies Acquisition and Transfer of Undertaking Acts of 1970, and the same also will have to be amended through Parliament. We all have seen as to what has happened to Air India. The government has put Air India on the block for sale in the last couple of years, but there are no takers. Jet Airways could not get strategical investors, and that is why it had to wind up its all activities. So many conditions in case of Air India were diluted. The liabilities of Air India are being taken by government one by one to make the offer more and more attractive for purchase of Air India, but there are no takers. That is a worse situation actually. But government wants to sell Air India, but there are no takers. So it's not that government of India wants to sell a public sector bank, wants to reduce its stake, and government wants and immediately it can do that and somebody comes forward and takes it. That is not going to happen. It will take some time and lot many issues will come up. Now government, when it may decide a sale stake or completely privatize a bank, it will have to ensure that that particular bank is truly sellable product. Its balance sheet is strong, its expenses are minimal, and its income is attractive, and actually it's a profit-making entity. Otherwise, who will come to take that bank? On the other hand, government has recently brought cooperative banks under the supervision of RBI. That will create lots of issues, and true picture of the strength and weaknesses of balance sheets of cooperative banks will come to the floor in next few months, or say within a year or so. In my own assessment, RBI will have to issue directives under Section 35A of the Banking Regulation Act 1949 and amended 1970 in respect of more and more cooperative banks, and RBI will have to bring curbs on those cooperative banks in terms of grant or renew any loans and advances, make new investment, incur any new liability or borrowed accounts and funds, accept new deposits, so on and so forth, and maybe restrictions on disbursement on loans, even sanction earlier. On the other hand, NBFCs, we all know, are struggling and the problems are being postponed with temporary measures. Many small banks, finance bank, may also do not have a different story to be told, and nobody knows what will actually be their position in next 1 or 2 years. Now, let us see what kind of major disruptions are likely to take place in banking industry in India, actually at international level also, but let us consider about India. Now, major disruptions are in the offing by way of technology like artificial intelligence, blockchains, chatbots, open banking, cryptocurrency, machine learning, digital voice assistants, smart speakers, software, so on and so forth. Naturally, the job losses are inevitable. At least there won't be attractive recruitment in days to come. Now, Google is also coming up with a platform with the help of their own local inputs, and it is likely to offer a platform for SMEs and MSMEs for sanction of loans as they may be requiring, and that would be a major disruption. On the other hand, Jio and WhatsApp, they have tied up and they have roped in Visa with the help of NPCI to have a biggest payment network, or we may say payment gateway, and that may be a great disruption. We all know that today more than 50 crore customers are there with WhatsApp. Now imagine Jio, WhatsApp, NPCI and Visa payment gateway. Naturally, the workload of banks will be reduced. So also the income of banks will likely get reduced. So government will have to do lots of work before attempting to privatize or sell any public sector bank. Many steps banks also will have to take in this regard, as may be directed by Government of India. We all know that there are 3 bills which have been placed on the floor of the Parliament to be passed for drastically amending labour laws. The entire corporate lobby will keep a watch on its passing in both the houses. Now, we all may recollect that the bill called FRDI bill, which was introduced in the Parliament with a built-in clause, had to be withdrawn because of the pressures from all sides. But now, another bill has been introduced under a different name actually, titled FSDR and Resolution Bill 2019. It is interesting to know that as of September 2018-19, you will be surprised, only 28.1% of the deposits in the banking system are insured. This is RBI data, mind well. This bill is bound to create waves in banking industry, and the face of banking will undergo a huge change. With this bill, government will try to limit its own liability of repayment of deposits in case of unfortunate failure of any bank, and if this bill is passed, that will create flow of deposits from one bank to other bank, mainly from private bank, cooperative banks or pathpays, to public sector banks looking to the safety and security of the public sector bank, it being a government ownership. Now, government will not like to bail out any of the banks if the bank fails. That is my own assessment of the situation. Now, government may not have money to further capitalize banks. Government is not getting any dividends from public sector banks, and at the same time, government may fall short of money and want money desperately. That is why, according to me, government may be fast-tracking the disinvestment plans, including banks. Now, if government is not able to handle the situation effectively and efficiently in next couple of years, in case of stake sale or attempt of privatization process, then in all probability, according to me, it will prefer another mega merger route and finally restrict banking sector to 4 banks, because they have already said that in any sector only 4 entities will remain in public sector. So they will have no option but to again rewind and push all those remaining banks, 2 from the mega banks and 6 standalone banks, in 4 banks as per their own commitment or their own policy. Now, presuming for the sake of debate that ultimately government is not able to sell the stake or privatize the remaining 6 standalone banks, then it will have to work on the voting rights and keep its own hold, because no government would like to give up its own hold or control, and according to me, the private sector also will insist for increase in suitable voting rights so that they will be able to take the complete charge of the bank with the least amount. Now, only large business houses will be able to infuse 10% in the capital of public sector banks, we all know. Other may not be able to even think about that. So naturally, the competition will thus be limited. A monopoly will come into picture, and only few will be able to operate in this regard. In such a situation, according to my assessment, a tug of war situation will start. Meanwhile, banks will be given pseudo autonomy according to me. At the same time, by tying their hands, and an atmosphere may be created in media that public sector banks are not performing well, they are bad performers and they are not giving good returns. It has already been stated in the recent survey report which has been submitted to the Parliament. Now, in that situation, due diligence exercise of standalone banks will start to be done by prospective purchasers. That is obvious. Now, due diligence study of the 6 standalone banks will involve study of assets and liabilities of the bank, branch network, customer composition, business composition, premiums of various safety nets to be paid like Deposit Insurance Corporation, other commitments, cost of different compliances, brand value of a particular bank, technology platforms, prudency of the management, professionalism of that management, average age of the staff in that bank, growth history of that bank, growth prospects of that bank, and more importantly, the employees' composition, their level of dedication, their level of skill, their level of experience, their preparedness to accept the challenges and deal with huge and high targets in a limited span of period. And most importantly, according to me, the due diligence exercise will also be conducted in respect of the power and strength of unions operating in the bank. Now, we all know that ex-RBI governor and also outside experts have also questioned the capabilities of present managements of some of the public sector banks. It is their observation that they lack in decision making, risk taking, professionalism, loyalty to the institution, and also vision. Is it not surprising? Once the due diligence is over by the private companies, then the purchasers will look at the share price of a particular bank to be taken. And naturally, market cap will come into picture. It will be an important factor. Shares may be pulled down, and or attempts will be made to ensure that government is forced to sell its stake at a very low price of a share. Because in most of the cases, privatization means stake sale by the government or placement of capital by private placement, which according to me in immediate near future is a remote possibility or a scenario. The shrewd calculations will be made as to cost of taking control and returns on investments, how much minimum is required to grab complete control of a particular public sector bank, how to destabilize the unions if they are strong, and how to use divide and rule policy if that bank is to be controlled and monitored and to be used as a profit-making machine, as is going to be normal expectation of any taker of a public sector bank. Now, corporate houses may induce the government, may pressurize the government, that is my own limited assessment, for one more mega mergers and then put those big banks, 6 big banks or 4 big banks on the offer. Many options may be tried, who knows? Who knows what happens in next couple of years? Now, if another mega merger takes place to keep only 4 banks as government wants in any sector, including banking sector, then the administration of that banks will have most challenging and very difficult tasks to be handled. We can imagine the data which I have with me is that the data of employees as of March 2019. Let us see what will happen if only 4 banks remain in public sector. In that case, on an average in those 4 banks, the staff strength would be around 2,01,745 employees. Now let us see the bifurcation of these employees. In that case, if 4 banks remain, imagine if 4 banks remain, I know this is hypothetical, but we are discussing that. If only 4 banks remains, as per taking into account the employees' position as of 2019, there will be 97,489 officers in each bank. There will be 73,000 845 clerks in each bank, and there will be 30,411 sub-staffs in each bank. From business point of view, from administration point of view, from monitoring point of view, from HR point of view, the things will become very, very challenging. The average staff strength will go beyond 2 lakhs, as I told already. The branch network will be huge, it will become unmanageable. Naturally, contractual jobs will be added, cutting the regular jobs which are offered to the age of 60 years as per the act prevailing today. In that case, there won't be attracting career growth for the employees and officers. Imagine if any bank is having more than 98,000 officers, how one officer joining a bank as a probationer officer can reach to the top. So almost there will not be any career progression. Stalemate situation will be there. Frustrations would be there. And in that case, recruitment in a permanent nature would be nil. There will be contractual job, there won't be recruitment. This is my own assessment. Now these 4 mega banks may become clones of each other because they all are big. They all are big. There is no much competition. Their spread is different. They are huge. Their platforms are huge. So in my assessment, those 4 banks will become clone of each other by virtually having no competition and no quality maintaining will be there for the customers. Customer service quality will get deteriorated. That is my assessment of the situation. Naturally, customer satisfaction will be on the back seat. I have purposefully not entered into any SWOT analysis of PSU banks vis-a-vis private sector banks. I have kept this topic aside because it's a huge topic. At the same time, I am not claiming that in this video I am covering all the related topics, all the related factors, all the canvas I am looking into. I am not claiming that. With my own limited assessment, with my own limited understanding and perception, I am trying to place these views before you. Now, in a worst situation, imagine, in a worst situation, is if government is not able or willing to give the capital as it used to give hitherto to public sector banks, standalone banks are not able to plow back capital from their own profits because they might be in an operating loss, who knows, or maybe net loss. Capital shortfall will increase. If second wave of NPA comes, NPAs will rise. That will need another capital, more capital. Similarly, market business share may shrink, who knows. Now, due diligence of bank in such a situation may not attract any private investors for taking the banks into their control, and that situation, according to me, shall be very serious situation. If that situation comes, if that position comes, that the position is deteriorating and there are no takers, government is not able to help in that situation, I am asking you a very serious question, my dear bankmen. I am asking you this. If that situation comes, that dangerous situation comes, then how a bank shall remain alive on the banking map of India? You ask this question to yourself. This will, according to me, a very dangerous position from political point of view for any ruling party. And if unfortunately that happens, a bank vanishes. As ex-RBI governor says, let some banks die. If that happens, it may lead to a debacle for a ruling political party. This is my own assessment. I stand for corrections. I am open for deliberations. I am open for even criticism for saying this. But I am not able to stop myself from posing this question before all of you. Now, on the other hand, let us analyze briefly. Public sector banking would have a larger possibility of crisis as I assess the situation. If the support of legal and regulatory framework is not there, if it is not that strong, which will insulate the internal pressures and external pressures of private sector banks, then things will be difficult for private sector banks also. It may therefore be wise to maintain public sector character of the banks and watch first as to how private sector banks are performing in given situation, in similar situation, in similar challenges, even without the pressure of various government schemes, various government reforms, various government compulsions. Let us see how private banks are performing. Let private banks show their gold. Let private banks show their metal before we think of privatizing or selling stake in public sector banks. That is my own assessment. Now, as on today, let us try to find out how much business is being handled by private sector banks and public sector banks. In short, we'll go to that. The data shows that as of September 2019, the private sector banks were having deposits to the tune of 37 lakhs 70,000 crores and advances of 27 lakhs, say 300 something crores. On the other hand, public sector banks were handling 84 lakhs 86,000 crores of business of deposits, and the advances of public sector banks were 58 lakhs 26,000 crores as of March 2019. I will try to update my data because I could not get comparative data of public sector and private sector for the same date. Now, as of 2019, in private sector, there were, you imagine, 4 lakh. Up till now, we have taken into account different aspects of the issue of government's intention to privatize some of the nationalized banks. Now, in the next leg, and before I conclude and I come to my final submissions and my own perceptions for your consideration, we will have to look around in a very brief manner within a couple of minutes as to what is happening around us at national level, maybe at international level. As everybody has said, as everybody in the IMF and World Bank and expert economists, they have said that because of the corona, the global economy has taken a worst hit, and it is like never before. There is no precedent what to do, how to react, what are the steps to be taken. So they say it's like never before. So they're expecting worst recession to come, and hundreds of crores of people will be pushed into below poverty line all over the world. Now, it is estimated that Indian banks may need more capital to the extent of $20 to $50 billion. You imagine. Whatever nationalized banks are there, maybe even private banks, if we take all of them together, the experts say in coming couple of years or 2-3 years, the banks may require more capital in the range of, say, $20 to $50 billion. On the other hand, government is going to borrow 12 lakh crores of rupees. Imagine what is going to happen to the deficit finances. The latest data about June which has come, it is estimated that in India itself, more than 48 lakh jobs have gone. Maybe from private industry, semi-private. Government as yet, we have not come across any news about government, but restrictions are there, cost cutting is there, DA has been freezed, and avoidable expenditure is being curtailed, and all these things are there. And recently a news has come that finance ministry has not allowed the carry forward of their budget, quarterly budget. If a ministry is not able to spend the budgeted amount during the quarter ending June, then carry forward is not allowed. So to that extent, restrictions are coming. In such a situation, it is also estimated that rupee will become more and more weak, and we know what is going to happen to that. On the other hand, RBI has come up with a payment infrastructure investment fund. We would like to see how much funds can be invested. Initial corpus is said to be 500 crores. Now, coming back a little to the IBC, the data says, the study says that during last few years after the introduction of IBC, more than 6,50,000 crores of haircuts have been taken by the bank. Imagine. There are no compiled figures as far as the recovery amount is there, but they say haircut taken by the banks is to the extent of 6,50,000 crores. Imagine. And as a result of these haircuts, as a result of these IBC proceedings, some companies have gone fat, and resultantly 1.1 million jobs have been lost thanks to IBC. Now, as a result of all this scenario, the investors are parking their funds in mostly strong banks, public sector banks, because investors have observed what has happened to Templeton Fund. Templeton has suddenly closed 6 of its funds and the customers have been caught unaware. So that is also going on there. Now, nationalized banks have virtually choked the capital to be given to the NBFCs. Now, RBI says that all those NBFCs and housing finance companies, those who are not able to maintain their net NPA level below 6%, they will not be having any facility as far as the special liquidity campaign is concerned or special liquidity scheme is concerned. And at the same time, as I told you earlier, that it is estimated that the NPAs of banking sector in India, of course including public sector banks, will zoom to the level of 14% again, never like that, never before. So these things are happening around us. Now, as I told, cost cutting is there. On the other hand, digital payments are coming. Banks is going out from the banks, and those platforms are enjoying. China is all ahead of us. Whatever you may say about China, it is ahead of all of us. And 70% of the transactions in China take place through internet, and so many internet users. It is said that the insurance companies are also going to take a big hit, and it is understood that the insurance companies in India are likely to close more than 1,000 of its branches all over India. Imagine what will happen. If insurance companies are going to close more than 1,000 branches, naturally the banks will follow the same suit. And there will be huge wave of surrendering the premises, reducing the premises, closure of the banks, closure of the banks, and this will have to keep into account. So before I try to conclude my submission and arrive at some conclusion, so we have seen in 3 parts that initially I explained over 40-45 minutes, I explained the entire scenario. In between I am trying to tell you in short what is happening around us. And at the end of this video, this part, I will be concluding my observations and my submissions to you. So as Vasant Ponkshe, a retired bank employee of Bank of Maharashtra, I am taking much pleasure in submitting all these things before you. Now we will go to the last part of this observations and case study. Imagine as of 2019, in private sector bank, there were 4,43,554 officers, 24 lakhs 83 clerks, 9,858 sub-staff, making total strength of private sector banks to the extent of 4,77,495. When public sector banks, there were 3,89,956 officers, 2,95,380 clerks, 1,21,647 sub-staff, making total staff strength of 8,06,983. Now, recent examples of problems of Punjab Maharashtra Cooperative Bank and Yes Bank cannot be ignored in this context. Let private sector banks show a way first that they can outclass public sector banks. Let them take the challenge to push reforms and relief packages of Government of India through them instead of through public sector banks. And if they are successful, then and then only a point can be taken for discussion about the privatization of public sector banks, according to me. One thing is certain here, that as I perceive today, it can be assessed that in case of privatization of public sector banks in India, there is not a good case at all. There is not a strong case at all. The point is not well founded, well grounded as far as the present situation is goes. And the recommendation to privatize public sector banks doesn't have any good steam in that. However, in given situation, according to me, a line of action for the bankmen, line of action for my bank colleagues in different banks, unite, fight, more fight, perform, more perform. Try your best and struggle with all the sacrifices at your disposal and give best of your performance to keep your own bank on its own legs and bank most viable bank. It shall be the only route available for bank staff of all cadres. While doing this, giving cooperation to the management, at the same time opposing wrongdoings of the management will have to be fought. Keeping updated and well skilled is also required to be followed by all bankmen. Now to conclude, when we can be done, what can be done at individual level to combat with likely good or bad situation in the next 5 years or in a decade, how to remain relevant to the situation which may arise in the next decade or so. I will try to explain in my next video. So to conclude, my dear bankmen, unite, fight, perform, cooperate and oppose management on the wrongdoing to ensure that each of the public sector bank remains most viable on its leg and viable for long. That is the only option available to the bankmen. With this, I am trying to conclude my placement as far as my views about the government's likely attempts to privatize public sector banks. With this is Vasant Ponkshe, retired officer from Bank of Maharashtra, saying goodbye to you. Goodbye. Thank you, my dear bankmen. I wait for my next video. Thank you. Thanks again. Thank you.